Hello, and welcome to First Service Residential's Board Brief, our series of short informative videos that you can watch on demand whenever you want and from wherever you like. I'm Eleanor Goldstein, and I'll be moderating today's board brief about condominium and community association insurance. As a board member, you understand that having the right coverage is essential to protecting property values in your community. But getting the right coverage at the most affordable pricing can be challenging. Community associations are facing rising premiums, additional building certification requirements, and other coverage-related issues. I've got a great panel of guests today that will discuss strategies you can use to ensure you're well covered at the best prices. Joining me are Lorenzo Cardenas, Commercial Property and Casualty Consultant at USI Insurance Services.
Hi, Eleanor. Thank you for having me.
Thank you. Armando Garza, Director of Insurance for First Service Financial.
Hi, Eleanor. It's a pleasure to be here.
Thank you. And Miriam Santiago, Regional Director at First Service Residential.
Hello, Eleanor. Happy to be here with all of you.
Thank you all so much for joining today. So Armando, let's start with you. How would you describe the state of today's insurance market?
Hi, Eleanor. Yeah, so, the market, we're really in a crisis mode, and it's been, a few events that have come together to really put us where we are today. And one of those things is, to begin with, is catastrophic events, right? Prior to 2017, we were in a soft market, and once 2017 came around and we kind of kicked that off with Irma, that's when we really started seeing an uptick in rates. And ever since then, it seems like we've had storms or wildfires or just something going on. And and the reason that this affects our rates is because it affects reinsurance rates. Right now, reinsurance is basically insurance for insurance carriers, right? When an insurance carrier insures your building, they take that risk and they basically sell it off to other insurance companies called reinsurers. Now, it's a global marketplace, really, right? So just because you haven't had a significant storm or event in your area doesn't necessarily mean that your rates are not being affected. So now, because reinsurance is really a global market, and anything that happens in China or any other part of the world will affect our rates here. So one of the big things driving our rates today is reinsurance rates, right? The carriers ultimately pass those rates down to us. The second thing that comes with the losses that we've experienced in the recent past is the losses, not only that the property owners have had, but that the insurance companies have had. So at least here in Florida, we've seen in the past couple of years, maybe 12 or 15 carriers that have either become insolvent or have exited the Florida market, right? And that puts a strain on capacity, right? It creates a supply and demand issue. So now that the carriers that are left are increasing their rates, right? They're becoming very stringent on the risks that they take on, and they're increasing rates, right? There's just not enough capacity to go around. So they're very stringent on the risks. Inflation is another one that's really driving premiums. But by Florida statute, associations have to get a replacement cost appraisal every 36 months. And what we're seeing now is that a lot of carriers that are just coming up on those 36 months. I mean, I'm sorry, not carriers, properties that are coming up on those 36 months are seeing a large increase in their values. Typically what we're seeing is a 20% increase on values. And that drives up your rates because your premium is basically a function of your value times the rate, right? So and it's going up, right? Real estate is going up. the cost of labor is going up, the cost of construction, the cost of raw materials, everything is driving those appraisals up. The next one, that's very important, and that Florida legislature is trying to take a crack at now, is litigation. Litigation, it's a big one. It's really affecting our rates. And at least in Florida, one of the bills that Florida legislature has passed recently is Senate Bill 2D. It creates one of the things that it tries to do is tries to lower those reinsurance rates by creating a reinsurance fund here in Florida. The other thing that it aims to do is to do away with one-way attorney fees and assignment of benefits. However, what the legislature is trying to do is to try to make the Florida market a more attractive place for carriers to ultimately come back in, creating more capacity, and with the goal of driving our rates down. Now, those things that the Senate bill that has passed now, 2D, right? Those types of things take a while to mature, right? We typically won't see anything affecting the market really for the next 24 months, and that's just because the carriers want to see a couple cycles of renewals, right? They want to see what Mother Nature has in store, and also the bills, how they affect the market. And if hopefully it makes it a more attractive market for carriers to come in, and we eventually will see some drop in rates with the increased capacity.
Thank you for that information, Armando. So to follow up on legislature, Senate Bill 4D makes it mandatory for all Florida condo and cooperative buildings 3 stories or higher to undergo milestone and structural inspections. There's also the 40-year recertification requiring buildings to be recertified for electrical and structural safety as they approach this 40-year mark. So Miriam, what are you hearing from the communities that you work with? How are your boards managing to meet these requirements?
Well, communities want to comply with all the new regulations, but are still a little bit confused since there's so many new requirements. One of the newer requirements is the milestone report, which is going to kind of put ahead of the 40 and 50 year, because the certifications for the 40 and 50 year were at 40 years. Your milestone report is going to be required at 30 years. And how that's calculated is December 31st of the year in which the building reaches its 30 years, and then 10 years after. The milestone report, you are going to receive a notice just like you did with your 40 and 50 year certifications by the county, and you're going to have 180 days to comply with that report. Additionally, there's also the new requirement of SIRS, which is your structural integrity reserve study, which must be done for your building every 10 years. So there's a lot of certifications and a lot of new things. My suggestion is hiring the professionals as soon as possible and making sure that you have them for the 2024 tracking, which is when they're going to be required. Also, preparation is key. Communities should start to be as proactive as possible to meet these new deadlines. Again, hiring the professionals, working closely with your management team, and choosing either your engineer, architect, or research study company to be better off and meet those requirements. Also, boards need to be communicated that the association fails to complete any of the SIRS or milestone report. Failure is a breach of an officers and directors' fiduciary responsibility to the unit owners, pursuant to the new section, which is 553.899 in Florida statutes.
Those are good points. Thank you for sharing that. So Lorenzo, over to you. What should communities know about how to meet these requirements from an insurance standpoint? What happens if they don't or can't go through the 40-year certification process? Can they still get coverage?
Well, to shine a light on that, as Armando stated earlier, the market is already in a very limited capacity, right? We've lost so many carriers throughout the years, and the market overall is already tough. So if you go into that perspective and already that marketplace that we're dealing with, and now you take into account that you don't have your 40-year certification, it continues to limit the marketplace even further. Back in the day, you were able to say that you were working on your 40-year certification, and most carriers were okay with accepting that. Unfortunately, after Surfside, that is no longer the case. The market is becoming very, very much more difficult, not just for the older buildings, but for all buildings in general. So not having the recertification actually puts you in a much tougher spot. What you can do to try to help out your case in the marketplace is to provide as much detail as possible as to where you stand on that report. The more information that you can provide your agent to provide to the marketplace, it's going to help you overall. If you can't provide this information, it puts you in a very difficult position where that already limited marketplace, you're basically at their mercy for whatever pricing and whatever terms they're going to provide. There may be some associations that have a hard time even finding full limits option based on their most recent appraisal. As Armando stated, you need to insure to the replacement costs listed on that appraisal. If you don't have these recertifications, it's going to cause you much more heartburn when working with the markets in order to get to that limit. So again, it's a very proactive approach. The more details and information you can provide your agent, it's going to help throughout this process.
Really good points. Thank you for sharing that. And Armando, how does First Service impact insurance legislation on behalf of the associations it manages?
Yeah, so First Service Residential advocates for its community associations before policymakers and regulators. To keep board members, the boards we serve up to date on insurance and other legislative matters. Our lobbyists is working day in, day out with lawmakers, and they're advocating on behalf of our community associations. During the legislative session, you can follow us on LinkedIn and Facebook, and watch for episodes of This Week in Florida Legislature.
Yeah, that's a great point. We are offering weekly updates, so be sure to check our Facebook page for that. Armando, what are some insights that you can share on how boards can lower their association premiums and prepare for renewals?
So, very good question. The most important thing that a board can do to try to mitigate the increases that we're seeing now is really be proactive. And be proactive in the sense that if you have an appraisal coming due, get the steps going to get that done, right? Again, by Florida statute, associations need an appraisal every 36 months. If you're at a property that has to do milestone inspections, start showing some proactivity and to make sure those things are getting done as well. And really, one thing that I advise all our boards on is really nail down a process with your agent. Process here is key. We typically like to start 150 days out prior to renewal. And the reason we start out so early is because, now with the limited carriers out in the market, they're very stringent on risks, and they're combing through everything with a fine-tooth comb. So we start that early to get all those reports done that need to be done, to gather all the data, all the loss history on a property, because remember, the submissions to the carriers is very important, right? So the quality of the data that goes out to the market is the really what's going to mitigate your increases, right? If you send poor quality data out to the market, that kind of leaves carriers to make assumptions on the condition and the construction of your property. So again, start early. Communication is very key with your agent. Sit down with your agent well ahead of time and ask your agent for an indication, right? The agent's job is to get boards prepared for renewal and letting them know what they can expect. We don't want any of our boards to be surprised with a huge increase, being blindsided 10 days prior to renewal with a huge rate increase. Those things should be communicated well in advance.
Very good. So the message I'm getting here is be proactive. Miriam, would you share some examples of how you and your team can support boards during this process?
Sure. Getting started as quickly as possible, I think is key. Hiring the correct experts to assure that your property is on target and meet those deadlines. Having a strong team with your property manager, work with your boards, get those professionals hired, maintain very good communication with your owners, making sure that you explain to them and you teach them why these new requirements are demanded and explain to them why, what benefits they're going to have on their lives, and security, while having the milestone, having the SIRS, which is the Structural Integrity Reserve Study. But again, I can't stress enough communication, teaching, and teamwork.
Yeah, communication truly is key. Lorenzo, from your perspective, what does it look like to shop for insurance in the marketplace? What is the most effective approach that boards should take when working with their agent?
Yeah, so that's a very good question. The way that the market was in the past, there was an abundance of carriers. So at which point boards would elect to bring in a couple agents, assign them a couple markets, and the one that got the best proposal would ultimately earn the partnership with the association. Unfortunately, because of the way that the market is right now, that process is no longer looks like that. What I would encourage is for each association to do what's called a broker selection. In that case, go ahead and interview several brokers and, see what's the best fit for your association. There's different characteristics to look at. You want to look at, who you feel comfortable with, because that's always important. You want to check on their market clout. And you also want to make sure that, based on their references, they're going to be the best to, advocate on behalf of the association. It's unfortunate that you have to go that route now. You can't just get several options. But if you were to separate the market, in many cases, you do need multiple carriers in order to just put a whole property program together. So if you were to separate the market, it's not advantageous to the association. So again, it's the process has changed ever since Surfside and since the market became in a crisis. There's a lot of documentation that's needed, appraisals, as Armando stated earlier, the recertifications, as Miriam talked about. All this is very important information that whoever you choose to represent the association should have. Even walking the site to have documentation and pictures of the event. Again, you don't want anybody to have to take a web picture of the roof, and if the agent doesn't have those pictures to support the roof condition, it'll put the association in a bad spot. So be proactive, as we've all mentioned today. Proactive and communication is very, very important.
Thank you for sharing your perspective. Those are all really great points. This has been a great discussion on a topic that impacts every association. Thank you, Lorenzo, Armando, and Miriam, for taking the time to speak with us. And to our viewers, thank you for joining us for this segment of the Board Brief. We hope that you found this information helpful and will put it into practice in your community. Thank you.